And here we have the relative study on the S&P E-mini once again. And this is an interesting study. This is like a market top, and it's an excellent use of relative analysis. So what do we note? Well, first of all, we have a good up move, and we form a trading range as seen. So with a quick glance, what do we notice? Well, down bar, volume, down bar, volume, down bar, volume, down bar, and volume. So yet again, the down bars have the widest spread with the highest volume. So this trading range here, after this up move, is riddled with selling. Logically, think about this action. What does it mean? I mean, if buyers were in full control after the move up, we should have a weak pullback and continue north. For example, normally after a strong move up like we have here, we want the market to come back down, and we want to see weak selling to go long here and continue north, a continuation trade. Okay, weak pullback, new momentum high, a weak pullback, and we continue north. Alternatively, we drive up, and as here we can see some churning like so, and we form a trading range. Here we'd want to see accumulation or evidence of buying, so we can create cause again to build enough cause so we can push up and make higher prices. But what do we have here is the opposite. We're not seeing accumulation. Here we're seeing sellers proving themselves. It's the exact opposite of what we would like to see. There is much more to this chart than meets the eye. Let's dig deeper into this chart. Well, we've already said that we've driven up. We formed a trading range with evidence of supply with the wide spreads and the volume. So now, using our comparative and relative analysis, let's compare the buying. So after the drive up to 1, what do we note? Well, we come down, and then we get this attempt to rally with these 2 bars. Okay, then we drive down here, then we attempt to rally with these 3 bars. We drive down here on this bar, and then we attempt to rally to here to 2 with 1, 2, 3, 4, 5, 6 bars with no volume. So that is a very choppy up move with no volume. Where's the buying we saw here with the wide spreads closing firm? Here we have increasing spreads, closing off the highs but instantly wiped out. These 3 bars closing off the highs, closing off the highs, closing off the highs, bang, this bar wipes out this progress. And then here we try to rally. We know the market is struggling here. We can see supply come down, and there's no volume on these bars. Okay, look at all this chop. Buying has deteriorated. It's dried up along with the volume. Now, bear in mind that the selling we have around us is all positive. It's increasing spreads with surges in volume. After this attempt to rally here, we get supreme weakness on this bar. Then we try to hold, and we drive up to 3 to resistance. This is now resistance. It's proven we cannot close above this level. So we drive up to 3, and what do we know? Well, volume declines at resistance into an area of supply. We've got think about this. We have evidence of supply all around us, and we have noted that demand is tired. It's declined. So this drive up here is like a last attempt to rally, which also tests here for demand before markdown. Why? Well, because this bar, think about this bar, it takes effort to drive it through here. So this here took demand. Yes, sellers came and they swamped it to close it weak on its lows, but it's still taken effort to drive it into these new highs. So before markdown, they just want to make sure there's no further buying in this area here. And what do we know? There is no buying. We can see there is no supply. Don't forget, it takes equal or greater volume to break a previous area of support and resistance. So compare this volume to this. So if we can't break into new highs on this volume, what are the odds of we breaking into new highs with this volume? Of course, the odds are very, very low. We've already stated that this move here, volume is declining, and therefore it's highly unlikely we will break through all this supply to the left. So we are disconfirming demand in this area. Agreed? So demand is negative or minus one. However, what produced that move is here. Dip down, reverse to close above support. Dip down, reverse to close support. So this is spring in action. Hidden test, spring in action. Label it as you will, but we know from this action here the market is going to have an attempt to rally. So this unsurprising that we do, and this is a bullish setup. So not only are we disconfirming demand in this area, we're disconfirming this bullish setup. Again, gives us additional weakness. Okay, and then a couple of bars later, what happens? Bang, market proves itself again. The sellers show their hands once again with good quality selling, widespread, good volume after more or less a no demand break into an area of supply. By using the relative analysis, the sellers are in control in this trading range. They have the volume, they have the wide spreads, as we've noted, they have the flow. One bar wipes out a lot of bars in one hit. Okay, that's a huge hint. These two bars, bang. So two bars here, wiped out by this. These three bars wiped out by this bar. All these 1, 2, 3, 4, 5, 6 bars wiped out by this one single bar. Then this down bar here wipes out all of these closes. You know, we're closing deep into all this price action, and that's a very subtle, powerful tool. There's a huge hint. That's what's occurring here is that the shift. There's a shift from buying to selling, and it's very apparent by the widespread down bars with high volume and the declining volume on the rallies with weakening price action. Clear as day, especially as this no demand into a previous area of supply followed by this good selling. By using the comparative analysis in the up moves, we can see the demand tiring. It's getting weaker. So when we piece together all these elements, the story of weakness unfolds, and then we can look to individual bars for an entry point. Like any bar here is perfect to trade. Let me just finish by saying we can apply this relative and comparative analysis to daily time frames, therefore daily trading ranges. More often than not, we will get excellent reads and we can position ourselves early on. Potency of this form of analysis speaks for itself. It's incredibly useful. We can use this relative and comparative analysis to analyze any patterns. People like head and shoulders, or they like flags and pennants and all kinds of shapes. We can read them by using our analysis. We can decipher any pattern and we can obtain a clean read. Of course, it's not always going to work, but more often than not, we know which way it's going to break. And as our skills develop, we can look to individual bars for entries like these here. Once we can analyze all this, we look. Don't forget, this is a 5-minute time frame. We'd have plenty of time. We've got 15, 20 minutes to enter here. It's not as if it's 30 seconds. We don't have to make rash decisions, and we should be analysing all of this as it unfolds live anyhow. And if we want a daily time frame, we have all the time in the world to make our decisions. Good. This completes our studies on comparative and relative analysis. On to the next.